All right, let's get this started. I am John Kaiser. This is the second session today. The title of my talk is Betting on Discovery Exploration. Last year was a pretty good year for those of you who had stayed in the game and were still long when things started turning around in January. It stalled in August. It looked pretty grim, but I think we are now heading into the next leg up, and those of you who are still in this space are going to make a lot of money betting on the resource juniors. There's going to be four parts to this talk. First, I'm going to talk about the four core narratives, how we should think about them. Then I'm going to talk about how do you think about discovery exploration, because I think discovery exploration is where you can be in control to some degree about how much money you do make. Then, if there is time, I will get into talking about what's standing in the way of the juniors from really flourishing. They are still under siege from the regulators. And then finally, I'll talk a bit about my solution to the problem, which will ultimately make you all important players in how the junior space operates. So the four core narratives are the commodity cycle, the hope that metal prices will rise and drag deposits into the money and encourage exploration for new deposits to meet future shortfalls. That's what the past decade was all about with the China boom. Then China peaked, the mining industry did what it does and fulfilled the supply gap. Now we have a bit of a hope that with Trump in charge, he can push through the infrastructure renewal that should have been started 8 years ago when Obama took over. Now that the Republicans control everything, all the usual objections for creating a huge deficit are out the window. That ultimately could be good for gold also. We will get the traditional fiat currency debasement, hyperinflation narrative back on track and get people buying gold stocks in the hope that the price of gold goes up substantially. The area where we got a glimpse with the rare earth boom in 2010 to 11, security of supply narratives, that's an area where I think we should focus, because if you listen to Trump's speech this morning, his inaugural speech, America First, he is really talking about circling the wagons and making the United States a type of hermit state like North Korea, collapsing globalization, and just shutting down everything that has built up in the post-World War II order. And that has extraordinary implications. If you look at that chart up there, that you see the red and the black, all these raw materials where China and Russia dominate as suppliers. It's going to be really interesting if he annoys absolutely everybody and shuts down trade relations. It's going to be very good for exploration in North and South America, because there's going to be a rush for raw material supply from jurisdictions where the Monroe Doctrine can possibly still be projected. Now, all of these things sort of require higher metal prices arising. I do think the Trump presidency will cause all kinds of geopolitical chaos, but we don't know. Until about a couple hours ago, he was a private citizen. What he does next could be very different. And there's also the interesting problem that he has appointed people to all positions of importance that reflect pretty much the far right-wing thinking of the Republican Party. And considering that the Republican Party is actually the handmaiden of the establishment, it really seems strange that they're going to tolerate this man who just declared this morning that Washington, D.C. is finished. It's now going to be all about the people. Well, one man cannot change that. And one reason I have an empty hat in this chart is that I don't think he will be president for very long. And then it will be a Republican-controlled system, and they'll continue an infrastructure build-up because this is now their game, and hopefully they don't do any of the really stupid stuff that's going to get the majority of people who didn't vote for him very much riled up and protests in the street and cause the United States to descend into a civil chaos. So Trump talks about making America great again. And what he's really talking to is that in relative terms, the United States is in a long-term state of decline. You can see from those charts that America's share of global GDP is declining, and the biggest beneficiary is China, with its population base about 4 or 5 times bigger and embracing almost all the capitalist techniques while still maintaining something of a central command economy. Now, there's a huge push towards back to authoritarian type regimes, and Trump certainly fits into that mold of having an elite run the entire country and beat everybody into submission. But he's competing against these other countries in this regard. So reversing this decline really isn't possible. It's really a question of how do we deal with the fact that all these other nations are getting bigger over the long run. And right now, the sort of policies he's talking about are completely wrong-headed for this, even taking on the CIA and declaring them as totally useless source of information until it happens to support what I want to do anyways. These are all counterproductive, destructive things. So I'm sort of thinking all this talk is a lot of nonsense, and we really shouldn't worry too much about it. This is, however, what we should worry about. Because, you know, when you hear this stuff about all this, this dossier of a compromising material that the Russians supposedly dug up, who knows if the Russians actually did, but the meme has been created that they have this, and when this stuff gets floated into the system, whether it's fabricated or real, it's going to be Russia who gets blamed for it. So these other countries out there, they will see this unstable person in charge. Hopefully they take his Twitter machine away from him so that he doesn't continue to make a fool of himself. But we really do have to worry about flashpoints in the South China Sea, China saying, let's get on with business and annex Taiwan while Trump's messing around in this area, Putin annexing the Baltic states, of course the Middle East turning into a total mess. Now you have this new Philippine president, Rodrigo Duterte. Trump today declared basically a war on drugs. I hope he's not watching what Duterte is doing, who said he would like to kill 3 million drug addicts, sort of the way Hitler was going to deal with groups that he didn't like. It's kind of scary language that we see out there. But the biggest nightmare is North Korea, because this is a hermit nation that doesn't have a proper relationship with the rest of the world. If they actually do have an intercontinental ballistic missile, I mean, China protects this country, but the United States is going to do something, have to do something. So we are facing a period where it's extremely delicate from a diplomatic point of view, and all kinds of geopolitical chaos could come out of this. And maybe Trump instinctively understands that this is inevitable, why he is already sort of talking about collapsing globalization and closing the ranks and maybe just creating a North and South American alliance, let Asia create the Australasian world, and then let Russia chew up Europe unless the Europeans want to pay a whole bunch of money. We already have a populist authoritarian movement in Europe where, you know, Poland's already that, Hungary's already that, Germany's concerned that the Russians are going to meddle in their elections and put the alternative right, give them the upper hand. Brexit may be moot because by the time they get that done, the European Union may already have been disintegrated and become sort of an extension of the former Soviet empire. So security supply narratives, you got to think about them. But there's one form of it which it's a much more positive one. While Trump talks about gutting the EPA, China's undergoing its own environmental awakening. And Robert Friedland has this wonderful quote he gave in Toronto at Mines and Money last September. The combination of corruption and pollution is toxic to the future of the Communist Party. And that is because their control no longer reaches down to the local level where corruption enables all this pollution to happen even when environmental rules are in place. And pollution is democratic. Air pollution affects rich and poor alike. Even water pollution, they irrigate their crops from river water and people eat it, so they're all unhappy that heavy metals are contaminating their food supply. So this could become the basis for a massive insurrection that takes care of the Communist Party. So taking care of the environment, getting it back on track, this is a key thing for China. And you got to think about a lot of metals that come from China. And one of them that people don't usually associate with China, usually it's like antimony, rare earths, tungsten, and so on, is zinc. China is the biggest producer of zinc. It comes from many small deposits, lots of them with cadmium and lead and other things in it that go into the water. Small smelters, refiners that don't properly handle the material. This is a big source of water pollution, and you got these 350 cities having water stations being set up around them to monitor, to shame the local officials into tracking down the culprits and shutting it down. We all know about the depletion of Western zinc mines, but not many people think about the possibility that Chinese supply might actually decline rather than ramp up and try and meet higher prices. We, I think, are finally in the zinc bull market. So the question that you should ask yourself, do you have a good zinc play? And one of them here is Vendetta Mining, and they are developing a project in Australia, the Pegmont, that has an exit strategy right there in Australia. And another company that's one of my spec value hunter picks is in zinc mining. It's in Utah, a state that's most friendly towards mine development. At the current $1.20 price, that project's back in the money. This thing will finally get a life. So you find yourself some good zinc projects that have both optionality potential and discovery exploration potential. Now, there's a huge debate about optionality versus discovery. And I've noticed today in the talk, First Mining's talk, that what was originally just an optionality play, a mineral bank, they are now also starting to spend money on adding value to the projects that they have. Now, the two companies that I'm sort of featuring here, one is Skeena Resources, who will talk shortly, the other First Mining Finance. They have different approaches. In the case of First Mining Finance, they took advantage of weak metal prices and absorbed these projects cheap and are waiting for the price of gold and silver to go up so they can farm these out to all the Johnny-come-latelys when they want a project. Skeena is Ron Netolitsky going back to British Columbia and reeling in systems that never quite made it as a mine, or were mines that got supposedly depleted or shut down because of weak gold prices. There's already ounces in the ground. They're probably not workable at the current price, but he's raising money to put to work to demonstrate that there are high-grade ounces that work with the price of gold that we have. Now, I personally think gold is going to go up in real prices, but it takes something substantial to drive that, and possibly Trump blowing it and accelerating America's relative decline could do that. The chart you see up there of gold, the important thing to understand is that $1,200 gold is the same as $400 gold in 1980, inflation adjusted, with the fact that over 3 billion ounces of low-hanging fruit were harvested, and what's left is not so low-hanging anymore. So the world wants more gold. It's going to have to pay a higher real price to get this out of the ground. And that's why I think we will see a simple move to $1,600 gold, real, no fiat currency debasement, no inflation. That is very, very powerful. That would be a 20% real price increase, and a lot of these optionality plays are leveraged to gold. But until that happens, you're just sitting there twiddling your thumbs. So look for companies which are also spending money to find something within their optionality systems that's going to work at the metal price that we have. Now here's another version of optionality. Two companies that are here that are going to be presenting next are Integra Gold and GoldQuest. GoldQuest has a gold-copper project that wants to develop as an underground mine, and Integra has a gold system in the Sigma-Lamaque camp where it is building ounces, and both of them work at the metal prices that we have, but their biggest oomph comes from the metals going higher down the road and making them much more valuable. But both companies are also offering you something, a blue sky exploration case shot, and in the case of Integra, it's the Lamaque Deeps, a high-risk 2,000-meter deep hole that will be wedged to see if there's an intersection of structures that produces a huge high-grade zone that suddenly makes that whole project worth way more than everything already there. And in the case of Gold Quest, they control this entire 40-kilometer belt of prospective rocks where they think there are more Romeros, and they are hitting these geophysical targets systematically, one after the other. They hit something interesting a couple of weeks ago that they will return to later. Look for plays that offer you this hybrid optionality of both, moving the advanced project forward and hoping, praying for a higher metal price, but also looking for an exploration surprise whose value eclipses the existing assets, the advanced assets at the current metal prices. So in discovery exploration, this is the area I like because that's where you go from some $5 million, $10 million market cap to $100, $200 million market cap. You get phenomenal gains if you are right. So there are really three basic ways of doing exploration, discovery exploration. Traditional grassroots exploration, where you go into areas and apply standard exploration techniques to where they haven't really been done before, perhaps with a new target model in mind. Then there's innovative new methods. Now, in the first case, we've got sort of Atomera and Playfair. They are in regions that they're being re-explored. We saw Mark's talk earlier today and for Northeast Washington, and we'll see Playfairs, I believe, tomorrow for northern part of Ireland, where there could be an entire unrecognized gold district. That's traditional exploration. We'll see San Marco tomorrow. That's one of my spec value hunter picks, using Aster data, public Aster data, recrunching it, applying it to Sonora State, generating 1,000 targets and systematically reducing them to a dozen or so alteration systems that have never been explored. Look for methods, stories like that in your juniors, because these are the ones that are going to generate something interesting. And then there's rethinking existing systems, such as we're seeing with Integra, where they go in there and say, do we really understand everything there is, or is there a lot more to it? If you've got a worthless mineralized system that isn't even close to having optionality value, ask yourself, did the past explorers really see everything there is that they, if it's been digitized, compiled, and you spin it around and apply different layers of information, can you see a target there? And of course, you want the company to explain it to you, help you understand what they are seeing. Lifestyle type companies don't know how to do that. So asking this question, show me your target, tell me what you think is there. And then of course there's the prospect generators who, like Riverside and Millrock will be presenting. They don't try to want to spend the money themselves. They apply the story, assemble projects, and try to farm them out. So you have to ask yourself, is there an interesting method to their prospect generation? Because we are still in a tough market. The lifestyle companies can't raise money to farm in, and the big guys are only interested in big conceptual projects such as, say, Oren's Committee Bay Greenstone Belt, where you're looking like entire giant district. I'm hoping we get back to the 90s, 80s, 90s discovery type thing. I do something called Discovery Watch, where I do interviews with Jim Goddard from HowStreet.com, where we just talk companies. Some are my picks, some I own, some I don't own at all. I just go out there and if they intrigue me, I talk about them. My hope is that one of these companies comes up with something fabulous that takes this current glass half empty and switches it half full, so that all you people out there who are sort of on the sidelines watching, all of a sudden you see this green light, it's game on again for discovery exploration plays. Just look for the link, Discovery Watch, on my website to get into this. It's just audio, not video. So this is what we are looking for. This was my pick last year in January as a bottom fish, Arizona Mining, 35 center. I upgraded it to a formal recommendation at 46 cents on March 3rd after they'd published a resource estimate. And it hit 347 or something like that until it got attacked by a fake news short selling syndicate calling it a BREWEX, which it isn't at all. The question is, did I get lucky, or was there a method behind talking about this in early March last year? And yes, there was. And here's the intimidating madness. I did an outcome visualization. I looked at what they had and I imagined, what if this were mine? What kind of numbers would apply? So I put those all in and then crunched them and got, life of mine average revenues or annual revenues and life of mine numbers. But what can you do with that? Well, it's a horrible equation called the discounted cash flow present value calculation, which is the key for valuing any finite life mining asset. And that thing generates an after-tax net present value, an internal rate of return, and of course I create a discount rate in the process. And then you need to know the project net interest, the fully diluted shares, and the stock price. And with those numbers, you can pretty much value the company related to how the market's valued. But what the company is worth, if it actually goes into production, is not the same as what it is worth now. The discount rate helps you quantify the risk related to the project. But what about the fact that back then this was just sort of an initial resource estimate with no economic study done yet? The whole exploration cycle is a process of gathering information, building up knowledge about the project, eliminating uncertainty. And what you really have going on is an uncertainty ladder where if you have a grassroots prospect, its chance of actually delivering a mine is about 0.5 to 1%. Now, people like Brent Cook can say, well, it's actually 1 in 1,000. But that assumes that the work done by the company in doing the general filtering is incompetent. If you have competent company that's discarding the 900 or so that, say, the San Marcos doing, you're already getting rid of that level of uncertainty. So as a project progresses through these different stages, the uncertainty declines and the outcome also ends up constrained. So that by the time you're doing pre-feasibility study, the deposit's not going to get much bigger. If anything, it's going to get much smaller. Now, that is an intimidating look of a pile of numbers, but you can convert it into this graphic, which is what I do. Each one of those shaded channels is basically the fair value channel for an exploration project with a particular outcome as it wanders through the different stages of the exploration cycle. And the basic gambling principle is it's a fair bet if the value of the outcome, if the odds, if the payout are identical to the odds of delivering that outcome. So good value is where you see something that the odds are lower than the market's assigning, and vice versa. A poor bet is one where the market's already assuming success, and the payout's going to be a lot less than the actual underlying odds. So in the case of Arizona mining, this looks like that. And you see the yellow line, that's where they are now. So fair value range is $1.40 to $3.40. But then there's a range of $3.49 to $10.47, which is called the S-curve. And this is the beauty of the discovery exploration, is you get S-curve behavior. If the market were rational, it would just follow the project within that blue channel. But during the early discovery stages where you do not know whether the outcome is going to be worth $2 billion or $100 million or all that, the market will overcompensate on the optimistic side. So if we do go back into a discovery exploration cycle, it's going to be a lot of fun, and the tools are now in place to make this happen. So last year we had a fair amount of money raised. We've turned the corner in terms of financing for the juniors, but it went to a small number of companies. Just under half owe about $1.6 billion. 22% have just enough money to stay alive, can't get anything going. So there's about 400 companies with $2 billion. That's what's left in the system. The system is not healthy yet. And there's a number of reasons. I'm not going to spend any time on this, but the brokerage, the regulators are killing the brokerage industry's ability to function as a gateway for financing juniors, for talking about them. The juniors are becoming alienated on their own. Retail clients are ending up in discount brokers. They have nobody to listen to. The companies aren't allowed to do the kind of quantification that I do. And even if you subscribe to my newsletter, that's just my idea. So what if John Kaiser thinks Arizona mining will be $14 at the end of the day? We want to see a number of different people, experts, all what their differing opinions are. So we need a system that allows this to be done outside the traditional brokerage industry sector, outside the newsletter sector. And I'm just going to flash this up here because this is being recorded, and you can go and look at the video when it's published and pause it and read this stuff. But I'm creating a system where I'm cloning myself endlessly by all you people. So imagine an online system where people log on, they have to be anonymous, their names can be Joe Blow, whatever, they have 0 credentials, and the system's disclaimer says, assume everybody here who shares anything has a conflict of interest and an agenda of manipulating the market and the behavior of everybody else. Now, that's actually how the real financial world works. But because it's all trusted, backed by credentials and all that, it's not widely understood and recognized as such. But in this system, where it's clear that this JK character is out there, he owns the stock already, he's coming up with this vision, you're not going to pay attention to him unless I evolve a reputation. So I'm building a system where any one of you, some of you are engineers, some of you are geologists, some of you are just ordinary investors, there could even be 15-year-old kids doing this. This becomes the learning tool for the whole system, how it works. It enables you to listen to these people, have them show all the dots and connect it, and then you go there and share what you think the company is trying to do. And what you're doing that the brokerage industry isn't allowed to do, what the company's not allowed to do, is you're quantifying the value of the outcome. And it's there for everybody to see and nitpick and complain and say this is wrong. But if you get a collaborative action like this going, this will actually converge to the truth, even though every participant is a predator. And the system will also have other members able to join as spectators to a boomtown to say the Romero project or say the SNP project, and then give thumbs down, thumbs up to the different members who are actually posting something. So you'll actually be able to see visually how is the audience reacting to stuff. You'll have real-time, time series perception of what's going on. Right now, it's got to be frustrating for you. You come here, you talk to these people, you go home, you got all these things in your head, and you don't know how to put together. By the time tomorrow arrives, you've forgotten it, you just buy the stock and hold. And that. We want to restore long-term gambling on fundamental outcomes with the ability to trade the volatility as the project goes. This whole world is geared towards short-term volatility trading, and that is killing the junior space. We need a longer-term attitude. So what's next? We're going into beta testing in March. Hopefully some of you will contact me and volunteer to be a beta tester. Hopefully we launch it by the end of the year. And I think this will be something that's going to change this industry, make it much richer. It'll turn it into the world's best gambling casino, and it actually produces real results, not just transferring the wealth of existing people to others. And just to close off, I promised myself I would not mention this company's name, but I couldn't resist leaving that last slide for you to take a peek at. Thank you.